This is the July 22nd, 2021 edition of the follow through, which is updating the above the 40 post that I delivered at the beginning of the week. AT40 or T2108, the percentage of stocks trading above their 40-day moving average, got to what I called close enough to oversold to flip cautiously bullish, and the market delivered big time. And looking at the S&P 500 here, you can see this picture perfect test of the 50-day moving average, which is the red line, and 3 days of buying followed. Now, typically, I'd expect from this kind of rebound some sort of pause or rest happening, but as you can see with this relentless uptrend, anything is possible. The money just keeps flowing into the market and it's near relentless. But anyway, if the natural law of physics, of market physics works, this should be time for a pause, but we'll see. All right, let's take a look at the NASDAQ. Now, the NASDAQ also followed through with a nice rebound. It did not hit the 50-day moving average. It hit the lower Bollinger Band, which is defined by this black line, but it too has 3 days of buying and is right back to, well, right below the former or the current closing all-time high. So things look good there. I'm most interested in the small caps or the IWM, iShares Russell 2000 ETF. This is a little disappointing. I said I was a buyer and I was a little late in buying on this day, which was a massive 3.1% move. I really should have bought right at the open, but I missed it. And now today, the small caps pull back 1.6%. So you can see the pause that I expect after a sharp oversold rebound is already taking place with small caps. We'll see what happens on the follow through, but I'm hoping if it comes down maybe about in this region, I'll get another chance to buy more call options at a cheaper price. Now, the volatility index, well, you can imagine what happened to it. It got totally smacked down. The faders went right to work. If you recall, on Monday, the VIX surged 22% and then fell back. It's fallen back these next 3 days. So you can see it quickly gave up all of the gains from Monday, and now it's reversing some of the gains from Friday. And of course, if the faders get their way, as they usually do, all of Friday's gains should eventually be reversed, which says good things about what will happen at least with the S&P 500 in the coming days. Now let's move on to some individual stocks that I checked out. Caterpillar, this trade worked out really well. You can see this hammer-like pattern that closed right at 200-day moving average support. I mean, this is, you can't get a more bullish setup than this in terms of playing an oversold bounce. The call options I bought on this one, unlike with the small caps, I was right there at the beginning. I bought some call options, and by the second day they had already doubled, so I went ahead and took profits. You can see Caterpillar slowed down today with a 0.8% loss, so it's already in the rest mode from the oversold bounce. I will be looking to buy on another dip, not right ahead of earnings, but hopefully I can get another chance to flip before earnings. All right, next up, we have our old friend Apple. Now, the Apple trading model is working pretty well over the last 2 months or so, as Apple has been on a streak. And as I said in my post, I dutifully bought here, which was unfortunate. Sorry, here is Friday, which was unfortunate because Apple lost 2.7% on Monday, but I went ahead and bought more call options and those paid out on the next day. There was another dip in Apple and I bought more call options and then I sold them again today. So you can see what the pattern is. Just buy the dip in Apple as long as this relentless uptrend is in place. Apple did do this breakout. You know, here is the old all-time high. So it's in breakout mode. So not only does it have the uptrend, but it has the breakout mode. So you just have to buy the dips and things should work out over time. All of that may change if Apple breaks below this low, then I may have to reconsider. Finally, there was Upwork. This was a great one as well. I'm still holding a position here with shares, not options, because I really want to see if I can hold out for a complete reversal of this big 17.4% down day. So the setup wasn't exactly perfect. I bought right at the 50-day moving average. As I pointed out in my last post, this bar here created a what's called a bullish engulfing pattern where the stock gapped down below the previous low, but then closed at above the previous intraday high. And so this engulfs the last candle. And it's bullish because it happened at the bottom of what was a very sharp, of course, but short downtrend. Now the challenge is, can buyers push Upwork above this 20-day moving average? I will probably put a tight stop on this one again because I anticipate some sort of pause on the oversold bounce. So my read is I don't have T2108 right now, or sorry, AT40 right now, but the oversold condition obviously is long over, and now we're just in a bullish mode for the market. I'm surprised. I have not seen any big blowups on any major earnings announcements, so we'll see what happens next week. I'm still expecting to hear some kind of news from companies that validates the worries that the market seemed to have. So until the next time, Dr. Duru will see you then.